In the home building world right now, most companies are playing it safe. They're churning out spec homes, basically ready to move in inventory just to keep volume high.
Exactly, it's a volume game. But then you have KB Home. They just released their Q4 earnings, and they are actively deciding to swim upstream.
Right? They're betting the farm on a build-to-order strategy. It's a bold move.
It really is. And looking at their Q4 numbers, you can see why it's a gamble. Revenue beat Wall Street's expectations, sure, but it was still down over 15% year over year.
Ouch. And their backlog, the line of people waiting for homes, is shrinking too. Margins are getting squeezed. So why pivot to build to order when the market is clearly tough?
Well, KB thinks this is their secret weapon to fix those shrinking margins.
It comes down to the bottom line, doesn't it?
Always. Executives said that built-to-order homes typically bring in gross margins that are 300 to 500 basis points higher than spec homes.
That is a massive difference. When you build a spec home, you might have to discount it later to move it. But a custom order, the buyer pays for exactly what they want, usually at a premium.
But here's the thing, you can't do build-to-order if it takes a year to build the house. Buyers won't wait.
That was the problem during the supply chain crunch. It was taking 240 days to deliver a home. Who wants to wait that long?
Exactly, but KB has cracked that code. They've got build times down to just under 120 days now. Some divisions are even under 100 days.
That speed changes the value proposition entirely. Now, the CEO, Jeffrey Mesger, is basically asking buyers, do you want a leftover house we built on speculation, or do you want to design your own and move in just 4 months later?
It's a compelling pitch, especially if you're competing against other builders who are just trying to offload inventory with rate buydowns and discounts.
And the goal is to hit 70% by the end of 2026.
Right. They are intentionally willing to sacrifice some market share and pace, meaning fewer total sales, in exchange for those higher profit margins.
That's the big differentiator. You look at competitors like Lennar, they are doing a pace over price strategy. Just keep selling, keep moving units.
And KV is doing the opposite. They're protecting the price tag. But that's risky when your backlog of orders is already down 37% year over year.
Yeah, if the buyers don't show up for the custom homes, you don't have the volume to fall back on.
Analysts are noticing that risk too. Wolf Research noted that pivoting to 70% build to order might take longer than KB thinks.
It depends heavily on the economy, right? KB is betting that higher income buyers will shrug off economic worries and still want that personalized home.
Well, hoping the first-time buyers stabilize enough to jump in.
KB's COO, Rob McGibney, made an interesting point about competition. He said they don't see much competition in the build-to-order space because everyone else is stuck trying to sell specs.
It's true. If everyone else is in a race to the bottom on price to clear inventory, KB stands out by offering customization. It's a blue ocean strategy in a crowded market.
So the takeaway, KB Home is trading volume for value. They're okay with being smaller if it means they're more profitable per home.
It's going to be a fascinating test case for 2026. Can you prioritize margins in a margin-compressed world? We'll have to watch and see if this bet pays off.
Absolutely. Thanks for listening, everyone.